in which monetary policy is complemented by other policies to manage the policy trade-offs will be crucial to deal with such multiple challenges. Let me now turn to domestic growth. Domestic economic activity continues to be resilient. On the supply side, steady progress in southwest monsoon, higher cumulative kharif sowing, and improving reservoir levels augur very well for the kharif output. The likelihood of La Nina conditions developing during the second half of the monsoon season is likely to have a bearing on agricultural production in the current financial year. Manufacturing activity continues to gain ground on the back of improving domestic demand. The Index of Industrial Production, that is IIP, growth accelerated in May this year. Purchasing Managers Index, that is PMI for manufacturing, at 58.1 in July remained elevated. Services sector maintained buoyancy as evidenced by the available high-frequency indicators. Now, when I say high-frequency indicators, I have given a lot of details in the footnote of my statement, which, as you would know, will get uploaded immediately my statement is over. In fact, for almost, most of the statements which I am making, there is a lot of backup data which we have given in the footnotes. So in the interest of time, I am not reading out that data, but it is there in the footnote. So when the statement is uploaded, I would encourage you to please have a look at it. Similarly, PMI services stood strong at 60.3 in July and is above 60 for 7 consecutive months, indicating robust expansion of services. On the demand side, household consumption is supporting a turnaround in rural demand and steady discretionary spending in urban areas. Fixed investment activity remained buoyant amid government's continued thrust on capex and other policy support from the government. Private corporate investment is gaining steam on the back of expansion in bank credit. Merchandise exports expanded in June, although at a slower pace. Expansion in non-oil, non-gold imports accelerated, reflecting resilience in domestic demand. Services exports recorded double-digit growth in May this year before moderating in June. Looking ahead, improved agricultural activity brightens the prospects of rural consumption, while sustained buoyancy in services activity is expected to support urban consumption. The healthy balance sheets of banks and corporates, thrust on capex by the government, and visible signs of pickup in private investment would drive investment activity in the current year. Improving prospects of global trade are expected to aid external demand. In fact, so far as external demand and the improving volume of global trade is concerned, all the international agencies have projected, a good growth in global trade vis-a-vis the numbers that we saw last year, and the numbers are given in the footnote. The spillovers from protracted geopolitical tensions, volatility in international financial markets, and geoeconomic fragmentation, however, pose risks on the downside. Taking all these factors into consideration, real GDP growth for 2024-25, that is for the current year, is projected at 7.2%, with Q1 at 7.1%, Q2 at 7.2%, Q3 at 7.3%, and Q4 at 7.2%. Real GDP growth for Q1 25-26.
All right, now these key announcements come after the meeting of the RBI's Monetary Policy Committee. In fact, the repurchase rate remains unchanged, and this is keeping the benchmark interest rate unchanged for the 9th time in a row. It's at 6.5%. To get us more on the key announcements, we're crossing over to my colleague Hina Gambhir. Hina, take us through the key takeaways of the speech of the RBI governor at this point.
Well, the most important aspect, of course, was the policy rate. So the Reserve Bank of India has maintained the status quo and there has been no change in the repo rate. It remains at 6.5%. This is the ninth consecutive time that we have seen RBI maintaining status quo. Now, what the RBI governor was mentioning during his press briefing was about inflation. That was very, very important point that he made, because inflation remains a big worry, not just in India but across the world as well. There are concerns around political tensions that we are seeing. He also mentioned about artificial intelligence, and those are certain factors that we all need to keep a close eye on. And at the same time, he said that the Reserve Bank of India has decided to focus on inflation and support price stability to ensure growth. The focus going forward is going to be more on inflation, and at the same time, we saw growth estimates coming in from the Reserve Bank of India. RBI has maintained the FY25 GDP growth estimate as well at 7.2%. RBI governor also said that the household consumption is also supporting the turnaround in demand. So, as far as demand is concerned, some kind of green shoots are visible, and it's the household consumption that is supporting it. Market, in fact, has seen a bit of a red after RBI's policy decision. Banks seem to be under pressure. Perhaps the expectation was that maybe some kind of a tinkering could happen, but that has not happened. But going forward, the RBI has made it very, very clear that the focus will continue to be on taming inflation.
All right, Hina, thank you so much for joining us and getting us that crucial information.